The Milken Institute gratefully acknowledges the participation of the following organizations. Without their generosity, our work and the Global Investors Symposium would not be possible. Ladies and gentlemen, please welcome to the stage Vice Chairman of Asia at Temasek and Chair of Asia at the Milken Institute, Robin Hu.
Well, ladies and gentlemen, I do apologize for interrupting your wonderful conversation around lunch to what is to come a fairly boring speech. But thank you for your indulgence. I appreciate very much your cooperation. Well, good afternoon, ladies and gentlemen, and welcome to today's lunch program. My name is Robin Hu, and I'm the chairman for Milken Institute for Asia. Now, the idea of Milken Institute launching an investors forum in Hong Kong was, oddly enough, seated in Singapore on the 28th of March, 2023, almost exact to this day a year ago. The occasion was the South China Morning Post China Conference in Southeast Asia. Financial Secretary Paul Chan was the guest of honor on that particular occasion. Now, during the event's dinner, I intimated the idea of a Global Investors Symposium in Hong Kong with the Financial Secretary, and he was immediately welcoming of the idea and asked how he and the Hong Kong government can be of help. I seized the opportunity immediately. A year later today, the idea has turned into reality, made possible by the tremendous support of the Hong Kong Monetary Authority and, of course, the personal endorsement of the Financial Secretary himself. To both, the Milken Institute is extremely grateful. There is no investment narrative one can meaningfully discuss here in Hong Kong without regard for mainland China. China is the largest trading partner to 140 nations across the world. China's GDP at US 180 trillion is about 4 times of Japan, 6 times India, 6 times ASEAN, 10 times Korea, and 12 times that of Australia. It is about 80% of the US economy and larger than the European Union combined of 27 nations. Now, China's share of the world economy in 2023 was about 18.5%, and it contributes to about 35% of the global growth. Yet, a combination of cyclical, systemic, and geopolitical challenges meant China is now facing its worst economic challenges in 40 years. Notwithstanding China's meteoric rise and innumerable profitable investments by the international investment community over the last 4 decades, investors today are wary about investing in China. The old China narrative has served them so well for so long can no longer be relied upon. The case for investing in China requires a brand new initiative and a brand new narrative. This is exactly what the symposium seeks to do. We do this by assembling the best of capital owners, entrepreneurs, and veteran investors and unleash them to share with us their success story, their pursuit of the next wave of emerging innovations, and their building of a resilient global supply chain, their global market expansion plan despite policy barriers, their understanding on how the likes of green tech and artificial intelligence might redefine businesses of tomorrow, and more. Through the sharing, we hope the delegates at the end of the day leave with ample ideas and fresh ingredients in crafting with conviction their own bespoke version of a new China narrative. On this note, we are privileged to have with us today's special luncheon panel, veteran investors Fang Fenglei, Fred Hu, Goodwin Gaw, and Clara Chan, to help us navigate the fog and take us on shore. I won't tell you how much their combined net worth is. Let's just say it may be larger than some of the country's GDP out there. Now, the session will be conducted in both English and Mandarin, and simultaneous translation is available via the devices. And ladies and gentlemen, please enjoy the courses already served and the wonderful discourse that is to follow. Thank you very much.
Please welcome your panel on Fine-Tuning the China Growth Engine, an Investment Perspective, moderated by CNN's Asia editor, Juliana Liu.
Thank you, Robin, for setting the stage for us so well. We're exceptionally fortunate to be joined by this panel of absolutely legendary investors. Now, I'm just going to start by asking each of you, respectively, what is your new China narrative? I'll start with you, Clara Chan.
Oh, thank you very much, Juliana. Well, for me, this new China narrative or new China story is always like a tale of two outlooks, right? When I read the press, particularly the international press, it's always about very skeptical and negative headlines. Weaker consumer confidence, overhang from the real estate sector, local government indebtedness, as well as like regulatory uncertainties. But what I experienced on the ground firsthand is a totally different story. So let me start with two things. The first thing is that China is the second world's largest economy, and it is undergoing an economic transition to a slower growth economy, but with a longer term, healthier, and sustainable future. And the second thing is, to all the potential uncertainties that we have been talking about, I think credit to the central government. They have not been shying away from all of these factors. They have been facing them, noting them, and also addressing them. So look at what happened and what was discussed in the past few days in Beijing, in the China Development Forum. I'm sure you could feel and see the pledge from the central government to be open to the market and also supportive to business. So just 3 points to add, perhaps, on this new China story. The first thing is when we talk about risks, challenges, and opportunities, I guess as pragmatic investors, long-term investors, we look at it actually not from a broad brush perspective. But I try to categorize it like cyclical, whether it is structural or what is about long-term. So when we talk about a lot of risks that today, like mainland China is facing, for example, the interest rate differential, which is driving some of the capital flow across the border. I think this is something cyclical, right? The interest rate cycle. But then when we look at the longer term themes for growth, for example, we heard President Xi saying in September last year about the new productive forces, the 生产力. So these are the things that I guess we definitely would be paying a lot of attention on and continue to follow up. This is the first point, and the quick second point is, while we look at, as I said, the new productive forces and the tone from the top on what China's economy is heading to, but I guess for me and all eyes around the world, we look at not only the theme, the guidance, but also the execution. So what is the path leading there? What is the timing? And also what are the institutional mechanisms that is going to guide us through? So this is the thing that I think we at the HKIC and also the world is looking very closely. The very last point is about Hong Kong. Hong Kong is part of China, and we also have the one country, two system. So I think on this new China story and new China initiative or the narrative, definitely Hong Kong will play a part. And I would say that for us, we have the advantage of being an international financial center. We are robust, vibrant, and open economy. And we are also very facilitating in terms of flow of capital, people, talent, as well as data. So I guess all of these very important key components are here to really shape the next and the new China narrative.
Thank you, Clara. We'll come back to those themes for sure.
Thank you.
方总，您对这个话题有什么看法？
谢谢各位啊，我想谈谈这个是，理解中国呢，我觉得首先要回答一个问题，就是为什么中央政府没有所谓的这个出重手来救经济啊？我觉得这是可能全球投资者关注的一个问题。我觉得我们试图理解他们的这个政策的思考。我觉得第一个就是，中国确实在疫情以后面临着我们叫危险三角区，就是房地产、地方债，还有这个3000多家小银行啊，很多接近技术上破产。第二一个就是，支持过去几十年发展的这个增长的动力啊，基本上到顶了。像基础设施建设、房地产，这个还有出口啊、外贸。这个第四个就是地方债这个结构也不可以再持续了，因为看美国是联邦债为主，中国这种长期以地方债为主这种结构，很大问题。另外就是人口在减少。第三一个，我觉得。中国政府的一个思考可能是他们有善于历史主义的来考虑问题，这个所谓40年的这个魔咒，这个 curse，他们呢认为，比如说美国在19世纪后期到20世纪初期黄金时代发展，最后出现了经济的很大问题。日本也是40年发展，出现了这个问题。那么中国40年突飞猛进，跑得太快，也出现了一系列的问题。所以，无论是从中国自己的经济发展遇到的瓶颈，还是中国自己体制出现的问题，都是还有历史的教训。我觉得他们采取一个比较谨慎的稳中求进的策略。也是有道理的。那么接下来可能要做一些重大的理论和政策的思考，要有一些新的调整。我觉得这些都在进行当中。我先说到这儿，谢谢。
Thank you. That's a really fascinating view of China's so-called 40-year-old problem or issue. Goodwin Gaw.
Juliana, thank you. Well, I think everyone keeps talking about when will China when is the real estate market in China going to hit its floor, or when is it going to stabilize? I think ultimately, right, China today's growth is, obviously we have seen export recovering, we have seen domestic consumption being stable. Obviously the habit's changing a little bit, but ultimately real estate constitute 30% or so or more of the GDP. And then if you distill it down to real estate, you look at residential real estate as a whole, it's about a 350 trillion renminbi valuation across China of people's homes. And 350 trillion, about 60% of every household balance sheet is real estate, is tied to real estate, because Chinese, as a culture, we like to park our savings in real estate. We trust bricks more than we trust cash in the bank. When you look at all that, obviously, you have a massive hole in the balance sheet of the households, right? A 20% correction, which is roughly where the secondary home prices are trading for, 20% correction from the height, that translates to 70 trillion renminbi in total value. And a 5% GDP growth means it's about 7 trillion renminbi a year of growth. So it will take 10 years alone to recover that, or 7 years just to fill the hole on people's household balance sheet alone, right? Being 60% of that number. You look at that, that's why you see the consumption not as robust. You look at the Golden Week where you have significantly increase in trips taken by people, yet the domestic consumption number was only single-digit increase. That means spending per trip is much lower. So in one word, it's opportunity in China. When the world thinks China is uninvestable, when you have a structural problem in real estate, still getting sorted out, yet people are still spending, although spending in a lower amount. As a result, I think Fred's company in KFC, it's doing well, right? McDonald's, KFC is doing well in tier 1 cities because that's where people are dropping their consumption into the lower tier in tier 1 cities. Outlet malls in China where we sell discounted branded goods are doing well because people can't buy the full price items. They're going to the discounted outlets to buy the items. Supermarkets is doing somewhat better. And in tier 2 cities, you're seeing downgrade consumption, but consumption is still strong. At the same time, you also see the reduction in order book for the factories, resulting in the extra capacity feeding the growth of Temu and Shein, for example, where those excess factory production are creating cheaper goods to be shipped to US, increasing export. So when the world thinks the second largest economy is uninvestable, there will be opportunities. But you do have to sift through the rubbles, understand the big direction of where China is trying to go through in this restructuring, reset of the economy, as Clara and Fang Zhong mentioned.
So is that where we are? Is that where the opportunities are, i.e. lipstick and cinemas?
You? Well, I think we're at a pivot point, right, on this restructure. And that's where I think you will find opportunities when your competition has been reduced significantly, because many of the bigger players deem China at this point to be uninvestable.
Fred Hu, an expert on China's macroeconomy, where do you see things going?
I actually feel cautiously optimistic, which maybe make me one of the outliers. Day in, day out, we've been bombarded with gloomy headlines about the Chinese economy, right? Yes, housing, woes, local government debt, deflation, youth unemployment, and the LCS, rising geopolitical tension. All these have created uncertainty for the economic outlook. But I think people tend to also sometimes forget the underlying strength Chinese economy still possesses. There are many, but I just highlight the three. First, foremost is really China's private sector, accounting for 70% of the GDP, the second largest in the world after US in terms of size and scale. And it's legendary Chinese private sector, entrepreneurial energy, the world-class manufacturing efficiency, and innovative, capacity, and speed to market. Right? This is all just legendary. We have seen, from industry to industry, so right now, yes, private sector feels a bit low or laying low, but it's down, but not out. Okay, so. This is a very important pillar for the economy. We have to recognize. Second, I would mention is China's underlying innovative potential. The world's largest pool of high-quality engineers and research scientists, and the cumulative R&D spending over last 2 decades. So, China used to be divided as a copycat, right, or be the very clever one. No longer. China today is unmistakably, one of the most powerful innovator in its own right. In fact, China is so innovative that it may cause some uneasiness in some of the capitals around the world. So again, when you think about all the negative headlines about China, don't underestimate what innovation would do to China in terms of productivity growth that will drive Chinese growth, not only in the near term, but in the coming years and even coming decades. Last, I would also just say consumer. Goodwin mentioned the household balance sheet. Yes, because of decline in real estate value and the stock value. So there is a negative wealth effect, no doubt about it. But at the same time, because of the frugality, high savings rate, and also propensity not to incur debt, even in real estate. I'm on the board of ICBC. The average LTV for Chinese mortgage debt holder is below 50%. That it takes a long time, for housing price decline to really hit the house balance sheet. Okay, so internationally speaking, Chinese house sector has one of the best balance sheet. Okay, it's far cry from what happened to the U.S. during the subprime in 2008. Right, so falling prices plus negative savings, that was a real killer to the economy. But China is not. Okay, so right now Chinese consumption is very low, 37% of GDP. But as we speak, China has been rebalancing. Okay, consumer as percent of GDP is slowly but steadily rising. Let's say rising to 60% of GDP. That alone translates into 3% GDP growth, every year in the coming years. So there's huge potential. You say, how to get 60%? Well, that's where India is today. Do you think the Chinese consumers will forever underspend, to the Indian counterparts? In fact, that's not. Okay, so these three strengths, in times of uncertainty, whether you are investor or journalist or commentator, yes, you should acknowledge, recognize the myriad of economic challenges facing China, but also don't forget the underlying strength. These are very, very powerful, very differentiated strengths. Not many economies, could have. So, but China has. So, yeah. Bottom line, I quite echo what Clara says. Despite all this naysayers and pessimism, I remain quite cautiously optimistic about China's near term. Whether it's 5% or 4.5% doesn't matter. But the more important, the immediate long-term growth in the coming years, 5 years. That's, after all, is what we care about as long-term investors.
So a follow-up for Goodwin and Fred. I think it's no exaggeration to say that literally all eyes are on China's property market. In some years, real estate has accounted for almost, nearly 30% of GDP. But we're still in the midst of a historic downturn. So are we starting to see a consolidation cycle taking place? Is that starting to happen?
Obviously, I think the media attention has been on the big developers, right? The big developers have a lot of overhang projects. Some are half finished. Those are probably the thing I would think is the biggest worry of the Chinese government. And when they think it's a problem, they tend to find ways to fix it, right? What you will probably start seeing, or we already started seeing, is some of the SOE, stronger developer with a stronger balance sheet, are absorbing the weaker developers, or in some cases, selectively taking over projects where the state-owned developers happen to dominate that particular region. So they will take it over, they will make sure the contractors get paid, they will make sure that bank loans get paid. Most importantly, they will make sure people who have deposits up for those flats get their flats delivered to them. That's happening systemically in an orderly fashion. That we are quite sure will take care of itself.
Do you have a time frame for that? Do you have a time frame for that? Sounds like a long process.
Yes, it's never quick, but then it may be a long process, but as long as it's progressing, as the market recover, then the market always moves a little bit ahead of the fundamental, right? or the reality on the street. If the market starts to believe that this is happening, then it will accelerate by itself. I think some M&As are already, some marriages are already being discussed behind the scene to accelerate this. When those marriages happen, then it's true M&A. And then those projects, and obviously I think investors have to understand, when you're investing in a developer's bonds, you never own the assets in China. There's always a Great China Wall, right? Fred and us, we all understand this. So we never touch developers' bonds as our investment thesis because we are essentially an unsecured creditor against the company's offshore shares, whereas the onshore asset are only allowed to be pledged to onshore licensed banks. So that disconnect means the offshore developers, the offshore bondholders will be dealt with very differently than the onshore secure creditor, whether it's an insurance company issue bond sold to individual bondholders or actually bank loans, for that example. So this will be orderly unwind, and we're seeing some of that already.
Fred?
Yeah, certainly this is a multi-year, very wrenching, difficult, complex, painful adjustment, right? As we have seen, learned from a housing crisis around the world, right, including U.S. subprime housing crisis. It's no quick fix. So given the size scale, in China, definitely will be multi-year, difficult process. At one point, speaking of developer, the consolidation and at one point, Forbes, 100 richest Chinese, almost all of them were public developers. That's clearly something wrong, right? Today is much more diversified. We have a lot of technology, entrepreneurs, and consumer service. So I think, the downsides of public sector, while painful in the short term, in the long term, it is good for the Chinese economy. So, we have manufacturing, services, consumer economy, right, instead of just, property. And on the demand side, which you mentioned, the consolidation of property developer. On the demand side, again, keep this critical fact. China still only just passing halfway mark of urbanization. We still have like 500 million plus residents in the rural areas, villages, okay? So as time goes by, if East Asia, whether Japan, Korea, Taiwan, not to mention Singapore and Hong Kong as a benchmark, China will still have 300 to 400 million people migration into cities. So in the mid long term, that's going to drive demand for residential housing as well as commercial real estate, public infrastructure. So again, short term, painful, difficult, and definitely economic drag. But in the mid long term, I think even property sector still probably spares some investment opportunities.
Thank you. On this topic of investment, Clara, I'm going to just turn to you as the first CEO of the Hong Kong Investment Corporation, which is still fairly new to many of us. It was set up not that long ago. What opportunities do you see in the new China?
Right, so perhaps let me take a step back, a brief background on the HKIC, and then I talk about the perspective. The HKIC was born in October 2022 when our chief executive announced it in his policy address. And as many of you may know, we are tasked with two mandates. Definitely one is driving financial return, but at the same time, equally importantly, we need to bring strategic value to Hong Kong, which is defined to cover, for example, how to enhance Hong Kong's long-term competitiveness and how to bring long-term economic vitality to Hong Kong. And so with that, I would also highlight a few things. Number one, we don't see ourselves as pure play capital provider. I have been in the investment arena for a long time, and I know that money is fungible. So I believe that if today market's not good, and then we're here to provide the money, but tomorrow I think many others, when the market comes back, they provide money, and then these corporates, these partnerships comes and go. I think this is not the thing that HKIC is targeting at. So we are not a pure provider of capital. Number two, we see ourselves as a builder and supporter for the relevant ecosystem in Hong Kong. For example, we are going to focus on the Hong Kong VC industry. We are going to focus on strategic sectors such as climate tech, fintech, advanced manufacturing, biotech, etc., where Hong Kong has an advantage. And last but not least, and this is where my new China narrative or story or perspective come from, is that because we also play our role as a super connector. So day in, day out, my team and myself, we have been talking to a lot of different people, not only in Hong Kong, but also beyond Hong Kong. And not only in the private market industry, but also governmental institutions, universities. We also talk to, I would say, research institutions and many other different talents and people. And so with that, we actually got the consensus that there are a lot of interesting opportunity in China. So basically borrowing what I think Goodwin and Fred were mentioning, even in the real estate sector, we shouldn't be seeing it as a broad brush, big sector is just like good or bad. Even in a particular sector where we have current stress, but we could find interesting opportunity with low valuation and interesting long-term growth trajectory. And with that in mind, there are a couple of sectors that I do see many of the people that we are talking to, not only in Hong Kong, but also internationally, like from the Middle East, from the Southeast Asia, they're very focused on in China, like biomedical, for example, also the automobile manufacturing, the power batteries, and also the chemical engineering. I think all of these are very interesting sector. And last but not least, apart from what I hear, right, from different people, I guess it's also very important as a smart and pragmatic investor to see whether people walk their talks. So I could quote a few cases that I recently noted in terms of the China development. There are a few very interesting cases. For example, last year, as I mentioned, President Xi announced this new productive forces, and then that was September. In November 2023, we saw Moderna, a US biomedical company, and they announced to start the construction of their first pharmaceutical plant in China. And this year, we saw Siemens. They set up their R&D center in Shenzhen on industrial software. And last but not least, Volkswagen. Earlier this year, they already completed the setup of the China Technology Center. And I heard that the investment amount was more than $4 billion US. And it is also in Anhui, and it is the second largest global center for them, really only after the one in Germany. So for me, it is always like trying to focus on the facts and the data and trying to stay away from the noises which may cloud our judgment.
Thank you. Let's now talk about tech. As Robin indicated in his introduction, among the major headwinds facing China is geopolitics. The Biden administration has said that it employs a so-called small yard, high fence approach to economic restrictions in China. And what this essentially means is placing restrictions on a limited number of areas with military applications and keeping things pretty normal in terms of business transactions in other areas. So this question goes to Mr. Fang. Is it really a small yard when these areas are considered to be so strategic to China? 这是个小院高墙这个问题。
小院高墙是这个沙利文提的，我觉得是美国在这个对华政策的调整过程当中的一个步骤，也没有非常明确的定义，方向无非是一个到处都建小院，小院连成片，另外一个方向就小院越来越小，最后看双方这个角力的结果，也可能小院越来越少，墙越来越高，也可能一个院一个院就被拆掉，这个都是有可能的。但是我觉得，这个基本的事实是，在当今世界上，这个具备这种科技竞争能力的，只有美国、中国。它需要有强大的科研能力和足够宽广的市场，还有足够的资金支持。那么在这种角力的情况下，我觉得双方需要有一个过程，但是我认为，对这个政策的理解，媒体的人士、政府的人士，还有那些国会的、行业协会的和企业，他们的看法都 不尽相同，都不一致的，因为这个我们看，比如说这个就拿最敏感的芯片行业来讲 ，Intel 继续还向中国供应芯片，它的比例也很高，而且向华为供应。AMD 减少了一些，它现在说我要追回来。我们看到美光这个跟中国打官司是最多的，在世界贸易组织也起诉中国的芯片公司，中国也说你的有问题，我政府停止对你美光产品的采购。最后的结局出乎市场预料，美光说你不采购我的芯片，我也不离开中国，不仅不离开，而且我还继续在中国投资，继续收购了西安的这个另外一个芯片厂。我觉得企业家有他的策略和他的智慧，同样中国的企业家也有他的智慧，我觉得这个过程此消彼长，这个过程也是让世界经济充满了一些复杂性，就像对美国的出口一样，可能这个中国看起来减少一些，但是这个供应链复杂了一点，长了一点，最终的结局没有改变。所以我的看法就是，还需要一个过程，还需要一个过程才能最后决定。不管怎么说，但是最后根本上还是你的实力来决定。就像5G 基站一样，有些国家不喜欢说华为的、中国的5G 基站我都不用，但是少数国家，大多数国家还是用，而且即使不全部用，我也用一部分，因为每一个业界的人都知道，中国的5G 基站在最初的时候和欧洲的5G 的基站的报价的数字是一样的，都是15万，一个是人民币，一个是美元，这就是差别。所以中国有2亿这个大学生，将近9600万这个工程技术人员，所以我相信中国在这个小院高墙当中不会输。谢谢。
So with these headwinds in place, should international investors still be looking to invest in Chinese tech companies? Fred Hu.
Yeah, absolutely. I just also quickly echo what Mr. Fang said about the tech war. So it's very unfortunate. The policymakers, certainly in Washington, have this deeply entrenched notion technology change is a zero-sum game. I think they're really wrong, intellectually and empirically, right? So, many countries engage in innovation, R&D, actually really lift humanity, make the world a better place. So the fact, even semiconductors, which is a good example, is not just that America monopolized. Yes, America was pioneer, but then, Japanese, South Korea, Taiwan, Netherlands, many countries, are becoming this very symbiotic, interdependent, sophisticated global supply chain, right? No country can do it alone. So I think collaboration, we're all better off, That's number one. Number two, forget about the small yard, high fence, because Americans, they have such big homes. The yards are so big that they forget, right? So of the yards, they say small yard. It's like football size, okay? So that's also very, very. Lastly, I think this kind of draconian curbs, restrictions, controls would do some harm to China, right? For sure. But also do some harm to the American tech industry, in the short term. But in the, I think at the best it could might slow down, China's relentless progress on the technology front. but it's not going to derail, right? China's continuous march towards the technology frontier. So the bottom line is, China is still, like I said earlier, one of the most formidable, exciting, innovative powerhouses. So if you are interested in tech, in long-term transformative technology, disruptive technologies, definitely China, outside the US, China is the next biggest ecosystem that we should focus on.
Now, staying on this theme of China trade policy, we have US elections coming up later this year. What are your thoughts about the likely candidates and how they're likely to tackle that issue? Fang Zong.
Oh.
I know you have thoughts on this. 美国大选。
美国，反正就是他们两个人嘛，两个比我年纪还大啊。
So, for those of you who don't have the translators, the headset thingies in place, he just said it's those two guys and they're older than me.
如果拜登呢，可能还是过去这4年这一套啊，这个可能他更强调他的价值观，他的这个结盟啊。但是我觉得相对mature一点、理性一点了啊。川普呢？不可预料多，但是基本上他是做生意的，是吧？我觉得对中国来讲，我觉得很简单，中国起码一段时间内对美国已经不抱幻想了，这是中国很基本的一个策略。我们做投资的人看，已经不抱幻想。但是也希望跟美国搞好关系，啊！但是在这个世界上，除了美国，还有欧洲，还有亚洲。对于中国来讲，这个世界还很广大，所以恐怕，对中国来讲最重要的还是做好自己。谢谢。
Goodwin, Fred?
Well, history tells us, right, sitting number one versus a rising number two always create conflict. If we all spend enough time in the U.S. to know anti-China is a bipartisan theme, right? There are very few things the two parties agree on in the U.S. Anti-China is. Sometimes conversation we have always, the reason U.S. is so strong, other than its military, is because of the U.S. dollar being the only reserve currency. And the fact that it is the only reserve currency means the U.S. can print money at will and fund all its deficit, and everyone in the world has to buy its debt. And that all comes from because China has been exporting deflation to U.S. for the longest time, allowing U.S. to print money with no consequences of depreciating currency. And unfortunately, the politicians in the U.S. don't understand all this fact or choose not to understand it. So the conflict is going to be in the foreseeable future. So in a way, it does force China to have to re-examine everything it does and to become more independent. So in the long run, after the short-term pain, could be healthy. And being a real estate guy, I may not agree with Mr. Trump's policy, but he will probably benefit the industry because he is one of the largest debtor of real estate. So high interest rate doesn't help him.
Fred?
Yeah, so very quickly, I think the election, really as far as China is concerned, probably just more of the same, right? Whether it's, Biden will get a second term or Trump will, get another second term. I think China policy will stay the same, just more of the same, okay? More restrictions, more tariffs, and, that's where hike likely scenario in the coming 4 years. So I wholeheartedly agree with Mr. Fang says. China is not a small open economy. US, no matter what the US does, is not going to determine, China's near-term or long-term economic outlook. It's really up to the Chinese themselves. So policy matters, but also really the Chinese consumers and the Chinese entrepreneurs. If China get that right, then even US become less relevant.
So we have just a few more minutes. Last question for everyone on this panel, and if you guys can keep it fairly to the point. The Chinese central government has set a very ambitious GDP target for this year of 5%, with a heavy emphasis on technology, improving the tech sector. A year from now, what would success in that area look like? I'll start with you, Clara Chan.
Yeah, thank you. Well, they recently announced the target, as you said, around 5%. And if I look back a year ago in 2023, I think at that point of time, they also said around 5%. And there were tremendous skepticism around the world about whether that was achievable. And then early this year, it was announced that it was 5.2%. So I think for the central government, they have obviously taken into account all other different factors that is available currently, like the macro, the geopolitical, and others, before coming up with this number. And I do believe, as Juliana just mentioned, innovation and technology would definitely be the growth driver. But I would also say that in terms of this GDP growth and the overall economic growth, and while this technology and innovation is the driver, but again, let's not look at each of these segments as a broad brush sector. Basically, technology, we could have different subsegments, and where, there are different sub-pockets which may present better value in terms of longer term, so we need to pick and choose as investor. And number two, I think the growth and recovery trajectory would also be bumpy. If you look at last year, the quarter-by-quarter GDP is also not kind of a step-up type of gradual go-up thing. So I guess it would be bumpy, and as I said, the growth and in terms of the momentum may really differ across different sectors.
方总。
这个中国去年的 GDP 的就是这个不错啊，特别疫情以后，但是因为这个平减指数是负的2也好所以这个 normally 的这个 GDP 不好所以但是可能这个中文翻译有问题啊，让领导可能觉得没有太重视这个 normally GDP， 所以今年呢，我觉得一个可能的一个重点就是需要调整，就是把这个 CPI 跟 PPI 要提上来，所以今年政府明确提出 CPI 的3%，这个是无论是从中央银行还是从政府来讲，头一次把这个CPI 3%温和增长、通货膨胀作为一个指标。我觉得也在开始采取一些措施，比如说 CPI 猪肉的问题，这个生小猪的这个母猪能繁母猪从4100万头已经准备要调整到3800万头、3900万头，这个猪肉的供应会减少一些，可能再发一些猪肉票。这个另外像能源价格已经开始调整了，电呀、汽油啊、水啊价都会调整一些。从 PPI 的角度来讲，今年以旧换新会有上万亿的规模，所以这个会对 PPI 有一个提高和刺激。所以我觉得再加上如果有一些居民收入增长，这个今年我觉得重点这个平减指数会上来。谢谢。
It seemed highly likely they will achieve the goal. On domestic consumption, as Fred mentioned, right, China's high saving rate. So despite the erosion of balance sheet, the high savings rate means people are still spending, but they may be spending on cheaper way or more efficient way to spend their dollars. They are still spending, right? So that's going to be there. And despite all the curbs on the tariffs on the export has still grown. You look at EV industry as a whole, they have come to dominate, both in battery technology, not just in production costs, but in technology on the batteries and also how EV cars are manufactured. So despite the tariffs, some of these cars being imported into the US are still the cheapest by a very wide margin. So those are all the manufacturing prowess that China already has. That's actually truly world-class, and that should help support.
And Fred, finally.
Yeah, definitely 5% is stretch, but achievable. I mentioned earlier, consumption alone could contribute 3 to 4% of GDP growth easily. Then you throw on top of it private sector investment, whether it's in solar, EV, battery, wind, renewable energy itself, plus some other technology sector, service sector, healthcare, would be 1% additional growth. So 5% definitely is reachable. There's still a lot that the government can do. We have the monetary policy to revive, inflation, to stop deflation, fiscal policy. Yes, there's still a lot of room, but I think there's only one thing the government should really focus on is to lift up confidence, consumer confidence, and business confidence. If domestic confidence come back, the Chinese economy will be roaring back.
Thank you, Fred. On that optimistic note, we're going to conclude this panel. Will you guys join me in a round of applause for our wonderful panelists? Thank you for all those insights. And just a bit of housekeeping. If you guys are still eating, feel free to finish up. But I think we need to turn the stage around for the next session. So finish up, or I think outside there might be more coffee for a networking session outside. So thank you so much. See you at the next session.